As May approaches in 2026, a recurring question is emerging in the crypto space. Could Bitcoin face another sharp decline, following a pattern seen in previous midterm election years? This pattern has sparked a divide among analysts, with some pointing to historical trends and others arguing that today's market dynamics have changed. In 2018 and 2022, Bitcoin saw notable price drops during May, coinciding with U.S. midterm elections. In 2018, Bitcoin fell from around $9,000 to below $6,000. In 2022, it dropped from approximately $38,000 to near $28,000. Analyst Merlion and Kalar has drawn a parallel between those years and 2026, suggesting Bitcoin could fall to as low as $33,000. However, others, like CoinEx senior analyst Jeff Koh, challenge this view. They argue that attributing these declines solely to seasonality misses the unique negative catalysts that triggered those drops. In 2018, Bitcoin's fall was driven by the collapse of MT, GOX, China's ICO regulations, and the Fed's tightening cycle. In 2022, the Terra ecosystem and FTX implosion played major roles. The current market environment is said to differ significantly. The introduction of spot Bitcoin ETFs in the US has brought institutional capital and regulatory clarity to the market. This has changed the structure of Bitcoin's price movement compared to previous cycles. Additionally, corporate Bitcoin acquisitions, led by firms like MicroStrategy, have introduced a new layer of demand. These developments suggest that Bitcoin's price today may not be as susceptible to the same seasonal forces as in the. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Another factor is the progress on the Clarity Act in the U.S. Congress. This legislation aims to provide a clearer regulatory framework for crypto assets, potentially stabilizing investor sentiment. If passed, it could reduce the uncertainty that has historically contributed to market volatility during political cycles. Despite these changes, the debate continues. Some analysts remain cautious, noting that while new factors are at play, the psychological impact of historical patterns cannot be ignored. The May timeframe still holds symbolic weight in investor behavior. If Bitcoin does decline, it could be a mix of both historical inertia and new market pressures. The uncertainty lies in whether these new market structures will be enough to override the past. The next key signal to watch is how Bitcoin performs in the coming weeks. If it shows signs of weakness in May, particularly around the midpoint of the month, it could indicate a deeper correction is underway. Conversely, if it holds firm or even rises, it may signal a break from the historical pattern and a new chapter in Bitcoin's behavior during midterm election years. The stakes for investors are high. A sharp decline could test the resilience of Bitcoin's current bull market and expose vulnerabilities in the market structure. Institutional investors, who have increasingly entered the space through ETFs and corporate holdings, may react differently than retail traders who are more influenced by sentiment and timing. If Bitcoin follows the historical pattern, it could trigger a broader reevaluation of crypto's role in a diversified portfolio. On the other hand, a deviation from the pattern could reinforce Bitcoin's status as a more mature asset, less influenced by political cycles. What makes this year's situation unique is the interplay of regulatory progress and institutional adoption. The Clarity Act, if passed, could provide a stable foundation for Bitcoin's price, reducing the impact of political uncertainty. At the same time, the presence of institutional buyers could act as a buffer against sharp sell-offs. However, these mechanisms are not foolproof. Political events, regulatory delays, or unexpected market shocks could still disrupt the balance. Investors are watching closely for signs of either outcome. The next few weeks will be critical in determining whether Bitcoin will follow the. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Pattern of past midterm years or chart a new path. The coming weeks will also reveal whether the market's psychological attachment to historical patterns remains strong or if the new dynamics are enough to break the cycle. If Bitcoin holds up in May 2026, it could mark a turning point in how the market interprets political cycles. If it declines, it may reinforce the idea that Bitcoin's price is still influenced by the same forces that shaped its past. Either way, the outcome will have important implications for how investors approach Bitcoin in future election years. For now, the market remains in a state of anticipation, waiting to see whether history will repeat itself or if Bitcoin is finally breaking free from its past.